Hello, everybody. My name is Sylvain Rochon, and I am Engineering Paradise. That's the title of my first book, Are You Ready? That I published January this year. So this is January 2018. Now, as some of you know, I'm doing an episodic series on YouTube that well, it's a process of writing my second book, also titled Engineering Paradise, subtitle to be determined. And in this book, I'm trying to show what an ideal world could look like using technology, advanced knowledge, and also basing ourselves on our past histories, what works, what doesn't. So this week, what I've been writing about the role of privately owned institutions in a new paradigm. In the past a few weeks, I've been talking a lot about the role of government, how to form it, and all this stuff. But it's really important to note that I'm not describing a communist society where the government and automation take care of everything. That's actually a bad idea. Like, of course, using automation, a very small amount of people as part of government could, in fact, distribute all goods or unconditional basic income, but so cash so people can buy. But the main issue that we found in the past with communism, in particular, is you're playing with human motivations. People they're driven, just like I am, in doing personal projects. So and to contribute in a personal way, in their own personal way, to society. And if you're provided by a central entity all the time, you have no motivation, which is why a lot of communist countries from the past, including the USSR and old China, well, not old, but not that long ago, China, now they're reforming, they're changing, and it's a little bit different. Now, we've seen that people don't really do a whole lot. It's very passive. It causes all sorts of trouble. And that's strictly because we have that need, that desire to go out and do something and be creative. And one of the biggest qualities of, I guess I'd call it capitalism, is that innovation comes out of when you create gaps or problems in society, and you allow the people, or you tell the people, it's like, okay, well, here's the problems, you guys solve it, right? And compete so that, we eventually, through a semi-democratic method, like paying where you vote with your wallet, the best ideas or the best services come out, those that are better executed, lower costs, higher quality, and then you have all sorts of products and services that are niche for certain segments of the population, because people, they're trying to resolve certain issues that are sometimes not broad. They're just for a certain segment of the population. It makes things really exciting, and people get into it and want to do certain things. Now, in the future, where in our ideal future, where no one really works, where no one works for a living anymore. Everybody has an occupation and does things. Some of them even serve a population. Some of them are cooks. Some of them are artists. And we're working alongside and with artificial intelligence and robotics in that sort of world, which is coming, like, believe it or not. People will want and desire and will have the low stress level to actually go out and do something exciting that they feel is important to them. Some people will group up and form companies, and there's no problems with companies. Sole proprietorships, partnerships, the most common forms of companies, and then there's other forms that are more administratively not problematic, but complicated, like corporations, for example, or LLCs. Limited liability company, slightly different. These can work rather well. One of the issues with corporations, however, is that Well, one of the good sides of corporations, you know, the trade-off for the complication is that it's a legal structure that where you have the corporate entity, like the actual corporation itself, is a legal entity on its own. It's like a person with no brain, if you will. So from a legal standpoint, people need to take care of it as if it's its own person. And also it removes part of the liability from the owners, which are called typically shareholders in this case. They own a certain amount of shares, and that's how you know who's an owner in a corporation and at what percentage and so on and so forth. So we're not necessarily talking about publicly traded companies that are on the stock market. No, most corporations are not publicly traded on the stock market. But nonetheless, that's the structure. Now, if we go back to our premise, like we want a society that is healthy, goes well, where everybody gets the basic, and then you want to have the health of innovation. You want to have this role from private companies and groupings of people that want to be driven. You want the minimum impact from government. You want the government to be put in place, all those ministries with these experts we elected by the people, again, right? We want that organization to ensure everybody gets what they need, like as far as basics, and serves the population in an unbiased way. Since these individuals and the AI that are assisting will, their task is to make sure everybody gets the basic stuff without delving into the specifics, right? One of the issues with this particular format is that the individuals that are there are not doing it specifically for their own good. They're doing it to serve others. So motivation is not as high, and so government tends to be less efficient, even though you have AI and robotics. In private companies, however, it's the other way around. What happens is that people are very, very driven by their own ideas, and they think that's the greatest idea ever in the world. They are extremely biased. And that's why people kind of argue with products. And product A, product B, mine is better, mine is better. And then people actually vote with their wallet, and the one that gets more sales generally wins, right? That's offer and demand as well is in there. If there's no demand for the product, it doesn't sell. So it's kind of a self-balancing act among people that are creating product and companies and services, and people that are buying. So there's this trade following offer and demand. That's great. So it's highly efficient because you're competitive and competing against others, but it's biased and it follows these up and downs. But you can't really deal with that with the basic needs. That's why government is handling the basic stuff, because that's what happens in a lot of countries, and in particular, of particular interest is looking at capitalism in the US, where a lot of what is considered basic and covered in a socialistic way in Europe and also Canada and a bunch of countries, the Americans don't want that. And so you have very expensive healthcare, a bunch of people that don't have healthcare at all. It's too expensive, that they can't get insurance. Too many things are privatized, and it creates this inequality that makes people suffer. And suffering increases stress, violence, criminality, and that's what we're seeing in the States, right? It's all this stress from all sorts of factors, because there's too many things that are privatized as part of the problem, not on the entire problem. No, so in our ideal world, we want to minimize the government to only things that need to be unbiased because it's basic needs. Private sector can take care of everything. Great. Now, from that's awesome. There's one major problem that we can't really, I don't believe we can use certain things that we have today in the ideal world. For instance, corporations are fine, but when we are dealing with things like privately owned corporations, where the investors, because sometimes it's not the owners that created the company that are investing, and so they have ownership and they have a say. when you have these individuals in there, sometimes what happens is that they don't have any liability. It's limited liability. That's what a corporation is. It allows the owners to have very limited liability in what the company actually does. Okay, so it kind of sets the stage for investors that all they really want is the return on investment. They don't really care. Now, in companies and corporations, that are not publicly traded on the stock market, it's a give and take. It's not so bad. The situation that I'm just about to describe, I guess, you have some investors that just want the ROI, but you have a lot of investors that do invest in these corporations set up because it's easy to invest in a corporation organized. You just buy a certain percent of shares. It makes it pretty standard and easy, which is why it's very common. Some investors are going to be just for ROI. Some really care. So they want the product to go out. They want the founders to succeed. And that's very, very healthy because they get on board as a partner with the founders. So you get good results. Sometimes the group will sacrifice profits to be socially responsible, to do a good deeds, to make sure. And there's always a trade-off when doing that. If you don't go to maximum profitability, your competitor may, and it may outpace you in market and price and things like that. But at the same time, since people buy the product with their wallets, if you don't take care of the environment and are socially responsible, things like that, the word may go around and that may bite you in the ass. So there's this balance that still can go on. And most of the companies, from my personal experience, that are privately owned, that are not too big, so it's fairly small. So fairly small. The owners, they really care. They care about the product and the company, not only the ROI. So they get in bed because they really want things to go. So that's healthy. Now the bigger corporations that are also private, then it gets a little bit wonkier if you get some, because there's a higher likelihood of investors, that come in, and they only want the ROI because they see the money in the dollar signs. And I guess some of that won't hurt. It doesn't hurt that much because it's balanced by all the companies that aren't following that psychology. Where I get into a serious issues is with publicly traded companies through the stock market. This is where things go really wrong. Like the biggest and the highest growing companies, well, if you look at the list of companies that are publicly traded on the New York Stock Exchange or whatever, these are all like huge companies. And most of the biggest companies in the world are traded publicly because that's a great way to raise a lot of funds. Now, the issue is not only the limited liability, but also the structure of the stock market, which is also a corporation, by the way. It's regulated, but it is a corporation that is private. People that invest from the stock market. Now, remember, stock market was, pre-Kickstarter, okay? You didn't have any internet, so it was a great way to fund larger projects by, crowdsourcing money, basically, from wealthier people. Barely 1/3 of the bottom 50% of American earners own stocks, and nearly 94% of the top income group own stocks in 2016. This is from the Federal Reserve reports, okay? So it's the wealthy that are buying into the stocks. Makes sense because they have disposable incomes to invest. That's why the stock market was created in the first place. It was in a place of need. Companies and the country and countries needed a way to grow bigger companies and crowdsource it. So the stock market was invented, and people would call in at the time, right? Because you couldn't trade yourself, and well, I want to buy X amount of stocks at this and this. There was a way to grow, but now it's become this monster where you have very disconnected, and it was the same originally, but a very disconnected investors that buy stocks in a company not because they really believe in the company. They really, like, why would you invest in the stock market except to make more money? That's what the great majority of people that go on the stock market, that's why they go. They want to spend money there, invest it, risk it, in the hopes of gaining money from the trade. So it's the intention is to get more money off of like limited work. It's just not really work. You're not really exchanging for a service or a product, right? You're just trying to get more money on a gamble. It's like, I guess it's gambling, okay? Now, this is a bit of an issue because compared to the other examples where you have company owners that really care, they want to have their idea out there, you have a bunch of people that just want to grow their money. And even in the ideal future, money is used as a barter mechanism, right? Whether it's cryptocurrency, it's, you know, whatever it is. If you can increase your cash that way, then the people that have more money have more opportunity to increase their cash just by gambling like this, using the stock market. And those companies that win the money, that raise the money this way, they want that money because, you know, well, that's how they're funded. And then things get really screwed because the shareholders, the buyers, the investors, don't have liability in the company. They're just kind of playing the gambling game. But the corporation itself is a real deal. It's actually doing products and services. And the way corporations work, if I can describe the different levels of how it's structured legally, you have the shareholders, so private, public, it doesn't really matter. Like the shareholders hold X amount of shares. They're the owners. They have limited liability. You know, they don't. They're just the owners. They're kind of hands off. Like, I'm just investing here. I want to get a return on my investment. And in the case of public companies or the publicly traded companies, you know, most of them don't care really about the company itself and what it does. They just want the money back. They want a multiple. But so you have the shareholders, and then how it's structured legally, you have, because it's a moral entity as a corporation, you need a board of directors. So a board is usually elected by a certain class of shareholders or all the shareholders, depending, on an annual basis, but that really depends case by case. It's usually annual, to take care of the company. Okay, the goal, the mandate of the directors is to follow through with the objective of the shareholders, because they're the owners, right? And the shareholders for a private company is maybe to grow the market, help people. It's going to vary quite a bit, but you do need to be profitable because that's the lifeblood of the company. For a publicly traded company, the objective of all shareholders, or the great majority of them, is make me money. So increase your profit margin as much as you can, because I want to get my money back. And if I don't, I'm gonna sell those shares. And selling shares in the stock market is emotional. Selling shares and too many shares means the price goes down. That means less money and capital for the company. So the corporation and its board of directors are really motivated to satisfy the shareholders, and they're selected as such to satisfy the shareholders. They're voted in, and they take care of the business, and they're the ones that hire the C-level manager, you know, the CEO and the operations officer and the CFOs and all these people to run the business itself. And that's the third level. You have the executives, or the officers, as far as the term goes. So you have these three levels, but ultimately the whole structure is there, legally in place, to ensure everything works fine and the company is taken care of, without the presence of the shareholders. So that's why the board is in place, just voted in, like, you guys take care of it, right? And the shareholders have different motivations, but publicly traded companies generally is like, make me more money. And these are already wealthy people in the majority. They want to make more money. And because they don't care about what happens with the company itself, and the company's mandate is to make more money, that's where things go bad. because then those corporations sometimes they make decisions almost exclusively to increase the profit margin. So you can have a lot of games going on. So you have companies, for example, because of public interest and the population wanting more socially responsible companies. You have companies like McDonald's and Coca-Cola that have products that people enjoy, but it's not the healthiest types of products. But they're heavily invested in showing that it's not so bad, and changing their menus and kind of giving to charity and doing things for kids. They want to show a beautiful image of themselves, because their product on its own is kind of terrible for children, right? It's unhealthy on its own, but they're showing this image because society is kind of changing, and they want to kind of throw a little dust in your eye so that you don't see so much, and the company is seen as, it's fast food, but it's okay. We're kind of bending the rules a bit, but we're doing a lot of great things elsewhere. But this is, make no mistake, this is not because the directors feel like absolutely responsible and they want to make sure that this is the position of the company for social good, because we need to do well. No, it's because people are looking at the media and they're looking for companies like that to buy into it. Like, they want to go to McDonald's and they want to buy Coca-Cola, and they want to be associated with good image, not simply fast and cheap thrills that will fatten you up or sugar you up. Okay, so they're buying to that. So if the companies don't change their tune, less people buy their product. It's all about the profitability. And they seem to be adapting to society because for the social good, but they are not. Their shareholders are on the stock market. The shareholders don't care. They just want to make a buck. They're wealthier people, for the most part, that want to make a buck. This whole system, in the ideal future society that I'm trying to envision and build, the stock market cannot exist. Because there's too much distance between individuals and the actual business. Now, there are more modern crowdsourcing ways to go about things that are extremely healthy, like Indiegogo, Kickstarter, Patreon, and others. Clubify, which is another one with a friend of mine, we're kind of launching together and having fun with. And these are all crowdsourcers. There's a bunch of others. These are all crowdsourced, like, okay, pledge money because I need it to start my business, but here's my product. And for your pledge and helping us out, if we have enough money for raising enough money to get going, we'll give you a product or a service, something that you want. So people that are pledging on Kickstarter, using that as an example, they want to have the stuff that the person is trying to build. And they believe in the product and the company and the pitch. So you're investing something, but you're getting something back that is actually tangible. You care about this company. You're not trying to make money back, just money against money. This is very, very socially healthy. It's very healthy as far as competition is concerned, because there's a lot of different competitors on Kickstarter. All these different platforms are competing against each other, and a lot of great products and services are coming out of it. That's terrific and amazing. So that's the new stock market, if you will. And it should be that way. We should not have an economy in which the rich can get the better of the poor just because they happen to have more money, and they can leverage it for money. Like money just for more money is a no-go. We should not be able to do that. We should not be able to speculate that way. We should be able to trade. Now, if you're able to build a new idea or work harder or provide a better service or product and make more money trading that, get rich that way. That's perfectly fine. Perfectly fine. But don't do it and then accelerating that gap of finances, which we see today, that the rich are getting richer and the poor are getting poorer. Well, it's because of the stock market and this kind of corporate structure. It's like that, and the people inside are just doing what they feel they're doing is right, but the whole structure creates this gap. The rich are trying to get richer, and they don't feel any problems in investing in the stock market. It's totally legal. It's been around for years and years and years. It's playing the market. I'd probably get flack off the internet for just saying that it should go away, because there's nothing wrong with it in principle, but the effect of it is bad. And that's where I'm coming from. That's why a government, which should be, again, the unbiased monitor and guide of the companies, and just creating regulations and kind of making sure that in the free market things are going the right way, should not allow such things. And then we can talk about banks just a little bit. Banks are a little bit like the stock market. In fact, they use it. Okay? When you put money in the bank, it's not in the bank. It actually gets reinvested in the stock market. They're making money, and you know, your interests that you receive off of your bank account, right, or your high interest investment at the bank and things like that, or even other services that the bank provides. They give you a little bit of interest, but that's because they're not giving it off of their own money. No, they're actually investing your cash along with others in the stock market, making some money off of there, and then they give you a little share of it in essence, but in a structured way. So they're using the stock market to leverage, and then they offer you, well, here's your thing, and then they offer, of course, they charge you for the opportunity of them investing your money and making more, and then they give you a little portion back. It's kind of a crazy system. That's also bad. Banks originally were designed to help people keep their money safe, and then since there was already a lot of money there, because people would, like, you know, you have a safe, well, put your money there, and you can take a little percentage. That's a service fee for keeping the cash here. That's no problem. Okay, that's a service for storing my cash, essentially. But then they started loaning money, and but money that belonged to other people, and I'm going to loan this to you, and I'm going to make interest off of it, and then they would play that game, and that's, you know, causes some issues, like we saw in 2008, where too many people needed their cash right out of banks and states, and there was not sufficient regulation to have enough funds in the actual coffers, so to speak. So this also would go away. I don't want to talk too much about that. But definitely, you know, I have a whole section plan in the book for that is just economy. So but I wanted to make the point in this part of the book where we just left off talking about government. You know, what is the role of private corporation and how those works, and how the government has to be tied to it as a regulator. Okay, and what should it allow and not allow? Anyway, that's it for now. It's been a little bit long, but I do have another smaller segment that is related to this next week that will be posted, and then we'll be moving on to the different ministries and how they'll function. Have a good one.